Have you heard all the negative press and bad information about reverse mortgages out there? So much of it is based in myth rather than truth. In today's video, we're going to talk about some of those myths and then we're going to bust them. As always, be sure to check with your family and a licensed financial professional before you make this or any other major financial decision. Now sit back and get ready to learn the truth about reverse. If this is your first time here, please like this video, subscribe to the channel, and be sure to tap that bell for notifications so that you can keep learning right along with us. If you have questions about reverse mortgages or you need some more information, please feel free to reach out to me anytime. My contact information is in the description right below. Those over age 62 have amassed more than $13 trillion in home equity, and it largely sits idle during retirement. My name is Brian McRae, and I'm here to change that mindset. Reverse mortgages aren't for everyone, but in the right circumstance, they can make a profound difference in the overall quality of your retirement. So much of the collective wisdom and truth about reverse mortgages is simply incorrect. It's wrong. A lot of this information is based in myths. These are things that people think are true about reverse mortgages, but in most cases, it's the exact opposite. So today, we're going to talk about some of the biggest myths in reverse mortgages and expose what the actual truth is. Educating the public about the real truths behind reverse mortgages is crucial so that we can make an informed decision about our financial future that's based in fact. So we're going to talk about some of those myths today and expose the real truth behind each one of them. And the first one, and this is by far the most pervasive and most damaging myth, is that the bank owns your home or that the bank gets your home in the end. And this is simply untrue. The reality of the home equity conversion mortgage is that it's just a mortgage, and it functions like any other mortgage does at that larger macro level. And what I mean by this is that the home equity conversion mortgage functions as a lien against your home, just like any other mortgage that you had. When you're thinking about the perceived risks associated with reverse mortgages, many of those risks involve the idea that you're somehow going to lose your house because the bank retains ownership. But the understanding that this is just a mortgage, and like any other mortgage, you are free to sell the home whenever you'd like. You can refinance into a traditional mortgage anytime you like. And the payment term is such that no payments are required until you decide to leave the home. And when you decide to leave the home, all you have to do is pay off the mortgage. The rest of the equity, the rest of the ownership is staying with the homeowner. So replacing this myth with the truth that the home equity conversion mortgage is just a mortgage that provides you flexibility rather than risk, it's going to go a long way to helping us adopt this into the collective wisdom as the truth. And this idea, this myth that the bank owns your home, leads to actually the second myth, which is this fear that you'll somehow lose your home if. Now, the reality of the situation is that you do have to pay your property taxes. You have to pay your homeowner's insurance, and you have to keep your property maintained. But you have to do those things anyway. They're not necessarily related to the home equity conversion mortgage. I actually read this in a major publication. This major publication, the sentence read, if you do not do X, Y, and Z, the lender will seize your home. And it used this vocabulary directly. The lender will seize your home. And to me, this conjures up images of us showing up in windbreakers and kicking grandma out of the house, and we just don't do that. And understand, this was written in a major publication, and the word seize was used specifically to instill fear. These things do not happen. Can you lose your house if you don't pay your property taxes? Sure, but that has nothing to do with the reverse mortgage. That has nothing to do with the home equity conversion mortgage, and everything to do with your responsibilities as a homeowner. So the next time you hear someone lost their house because of the reverse mortgage, dig in and figure out what the real reason was, because the home equity conversion mortgage is just a mortgage like any other. Myth number 3 is my children or my estate could get stuck with a big bill at the end of the reverse mortgage. And this one's not true because of the no recourse feature. Now, if you have a loan balance, you have to pay off the loan balance when you leave the home. But any remaining equity, that goes to the estate or to the owners or to the heirs. So if for whatever reason the loan balance exceeds what the home is worth, that outcome is actually guaranteed, and there's no recourse against the borrowers or their heirs for that shortage. Now, when we talk about a big bill left at the end, One of the things that I do see, and this is why I say it's so important to talk to your family and to a licensed financial professional before you go through with the home equity conversion mortgage, because you may have set the expectation with your estate, you may have set the expectation with your family that you're going to leave behind a paid off home as part of your will. And if that's the expectation that you set, and then you don't inform your heirs or don't inform the estate that you have a reverse mortgage, the expectation that your heirs have that they're going to get this home free and clear, oftentimes they're surprised with this reverse mortgage balance. So much of the negativity that I hear about reverse mortgages are based in experiences just like this. The surprise isn't a big bill left at the end. The surprise is that the family had a reverse mortgage in the first place and didn't inform the family. This is a financial planning tool. It's not a transaction. And because it's a financial planning tool, it's so important that you involve your family and that you involve a licensed financial professional before you do this. So this idea that you're going to get stuck with a big bill at the end that you're going to have to write a big check for, well, it's not really true, because the house is going to pay for it. And there's no recourse against the borrowers or the heirs or the estate if the home's value may come up short. Getting around this myth requires an understanding of how the reverse mortgage works, but it also requires us to communicate with our heirs, communicate with our financial advisors so that everyone knows that the home equity conversion mortgage is in place, and then it can be used intentionally to plan retirement's execution. And perhaps the biggest myth of all, this is the thing that I think keeps us from considering the home equity conversion mortgage as a viable financial planning tool, is this idea that it's for the desperate, it's something that you should do if you have to do it. It's a loan of last resort. And this is absolutely not true, because the home equity conversion mortgage was designed from the ground up to allow those 62 and over to access a safe and intentional portion of their equity. And then there are all sorts of ways to maneuver this equity throughout the retirement portfolio. So this instrument was designed as a means to help those over age 62 use this $13 trillion pool of equity that they have, but to do so in a way that enhances their retirement. And so this is not a tool to be considered as a last resort. It's not a tool to be considered reactionally. It's something that should be integrated into the retirement program. And when it's integrated effectively, it becomes part of the overall financial execution plan. And now you have this pool of wealth that you can use in retirement that you didn't have access to before. So this idea that it's a loan of last resort keeps us from considering it. And it's keeping us from considering what is probably your largest source of wealth, home equity. One of the biggest reasons we created The Truth About Reverse was to attack and approach all of the negative myths that are out there. These myths have pervaded the collective wisdom and become the truth, and they're simply not accurate. Understanding the truth about reverse is crucial to help you make an informed decision about your financial future and also determine how home equity might fit into the overall retirement picture. Unfortunately, all these myths, first of all, they're not true. In fact, the opposite tends to be true. But these myths are creating fear and uncertainty and doubt, and this is keeping us from considering an instrument, this home equity conversion mortgage, that was built for you to safely and intentionally access this wealth. So understanding the truth about reverse, well, that's why we're here, because this truth will help you make an informed decision, an analytical decision about how and if and when to deploy home equity in your retirement portfolio. I hope this information helps clear up some of these myths and helps you get a clearer vision into the actual truth about reverse. Until next time, keep on learning the truth about reverse.